Hey guys, I'm Matthew Pfeiffer and this is Bald Prairie Real Estate. We're going to go with a new segment today. I'm calling this Real Estate Rumblings. Just kind of quick little what's in the media in the real estate world. Won't be a regular feature. Just when something interesting comes up, I'm going to do these quick little update videos. And of course, we're still going to have bad dad jokes. I got that coming right after the break. Welcome back, guys. This is going to be my Real Estate Rumblings kind of segment I'm doing here. Thanks for watching. Of course, let's get you a bad dad joke. What's Forrest Gump's password? One Forrest One. Yes, like that one. This is going to be a little more of an informal segment here, just kind of going through some of the things I see in the news. I'm not going to do these all the time. Just when something important comes up, I wanted to get a quick little talk on it. So first thing I'm going through here is there's a new report out of CD Howe Institute, and they wanted to look at what would happen instead of 5-year mortgage terms if we went to 10-year mortgage terms. I know that the Bank of Canada governor's also been looking at this as well. They think it might bring some stability to the real estate market. Instead of every 5 years bumps in interest rates for people, now we're spreading out to 10. So that's a little interesting. They're saying though we might need to make this more appealing to people. Why would you go for a 10-year when 5-year interest rates are really, really low right now, especially compared to 10-year ones? Well, they're saying maybe let's look at reducing that stress test or even potentially eliminating it, I guess, on a 10-year term. This is all speculation here, guys. This is nothing set in stone. The thought process is the stress test was put in so that if we do get a bump in interest rates very quickly, that we know people are going to be able to qualify that for 5 years later when they go and renew their mortgage. The idea is that now it's going to be a longer term here, so maybe they're not going to have as much of a stress test. So I'm interested in that. I can see why the banks really want this or be interested in this. It's going to reduce the churn, people going from bank to bank every 5 years. So I think this would be very appealing for banks. I'm curious how it affects customers right now. When you're breaking your mortgage before your term is up, those payout penalties can be fairly substantial. So I'm not sure if this is something that's good for the consumer if they're looking to sell their house. I'm curious. We'll see where it goes. Next term, let's go through interest rates on banks right now. Some of these have come up a little bit, actually. A few months ago, you could see 269, 275. I have heard a few rates around 2.85. Again, this is January 2020. But posted rates right now on the specials, BMO's at 2.99, CIBC's 3.14, RBC's 3.24, TD's at 2.99. I think they just dropped to that, actually. So interest rates are coming up just a little bit here, which is interesting because the last topic I wanted to talk about here was the Bank of Canada just changed their interest rate, or I should say didn't change their interest rate. They kept it flat at 1.75 for the overnight rate. They were some speculation that you might see a little bit of a bump in that. They saw some data in the last half of 2019 where they saw a slowdown, especially in the fourth quarter. That got them a little bit spooked. So they're saying we're going to keep it at 1.75. That being said, the predictions for an interest rate bump on that overnight rate are still at 50-50 for the back half of the year. So we might see a bump in those interest rates later on this year. Really, what does that mean? Well, they are having confidence in the market overall. Again, these are national. I know if we're looking regional, there's some disparity there, especially out west compared to out east in Canada. But they're saying job rates are looking good right now. They're expecting 1.6 to 2% expansion in the economy. That's pretty good to see. Again, job numbers are good. So they're saying they think this 2020 year is going to be an okay year. There is some worries of recession. There's some worries of trade wars, things like that. Those are things that are a little bit out of our hands. We can only control what we've got here in front of us. That's where they're thinking things are going to be at. So wrap things up here, guys. 10-year mortgage terms, that's something I'm interested in. Interest rates have come up a little bit. So if you're looking at buying, interest rates are pretty cheap compared to what they might be, especially if we're looking at an interest rate bump 6 months down the road. So if you're looking at buying, you probably got a good interest rate you can lock in right now. That's it, guys. That's kind of the quick little real estate rumblings for what's going on. We're January 2020. If you like this content, guys, throw me a like. Throw some comments below, tell me what you think. I'd like to do these every once in a while, quick little informal videos when there's interesting news that's come up in the real estate market. That's it. Have a good one.